Right now, somewhere in the City of London, a partner at a major law firm is turning away a client. Not because the work isn't good enough, but because they're already representing someone else in the same dispute. And then another firm says the same thing, and then another. So look, when the biggest commercial law firms in the world can't take new cases because every party in a global dispute is already their client, something significant has really happened. The system has been stress tested. It's starting to show cracks. The dispute isn't about a merger gone wrong. It's about oil and that 21-mile strip of water between Iran and Oman that's endlessly been in the news lately. It's also about what happens when the assumptions underpinning global trade quietly stop being true. The Strait of Hormuz has sat in risk registers for decades as a theoretical threat, the kind of thing that gets one paragraph at the bottom of an annual report. But on the 20th of February this year, it stopped being theoretical. US and Israeli strikes on Iran and the assassination of the Iranian supreme leader. In retaliation, Iran shut the door for the strait, followed by a blockade by the United States. Flows that had averaged around 20 million barrels of oil a day fell to a trickle. The International Energy Agency called it the largest supply shock in the history of global oil markets. Not since the 1970s, not since the last Gulf War, ever. But there's a quieter story running underneath that I think is really interesting. And it starts with a single cargo of oil that never arrived. 500,000 barrel shipment of Murbian crude was due to load onto a tanker on the 21st of March. It was bought and sold multiple times before it ever touched a ship passing through Shell, CNOOC, Total, Mercurio, PetroChina. And when delivery finally came, only 62,000 barrels were declared. Shell's now demanding around 35 million in compensation. But one of the executives in the industry told us that's just one cargo, but they expect disputes to lead to many, many billions of dollars of cases. Almost all of these contracts refer to English law because London's always been the legal backbone of global commodity trading. It's why disputes always land there. But English law has a problem with what's happening. They've got something called the doctrine of frustration included in all the contracts, and it's notoriously difficult to satisfy because courts show little sympathy for commercial inconvenience. And crucially here, the strait has not been formally closed. It's remained technically open, just dramatically more dangerous. So legally a complication rather than an impossibility here. Insurance rates surged 4 to 6 times within weeks. The contracts didn't move with them. This isn't just a legal problem, it's a power problem. Iran announced it would only allow Chinese vessels to pass. One ship reportedly paid $2 million to use Iran's channel. Russia and China vetoed a UN resolution calling for an end to the attacks on shipping. The framework governing the contracts was written for a world where states respected freedom of navigation. The head of the International Maritime Organization put it plainly: ships and crews have become leverage in geopolitical disputes. And I don't think he was wrong. The power problems rarely, though, get resolved in arbitration. And while lawyers argue about who owes what, the costs do not wait for a verdict. They just move downstream to all of us, into freight rates, energy bills, food prices. More than 30% of global fertilizer trade moves through this strait after all. So this will reach the checkout, not just the boardroom, which will make it a political headache too. Because ultimately, governments need a simple story. They want to be able to say the strait's reopened, prices have fallen, the problem solved. But the legal disputes will grind on long after the ships start moving. The costs will be embedded into the system and they will not unwind cleanly. Politicians are left having to explain why relief has not arrived when the headline conflict is supposedly over. The strait will reopen after all, but confidence is going to be harder to restore than a shipping lane. The assumption that physical routes stay open is key, that contracts hold across borders, that a rules-based order means something when a state decides the rules don't apply. These are not energy industry problems. Every business with global supply chains, every government with an inflation problem is sitting with the same question. What happens to your contracts when the world stops behaving as they were written. I'm Gavin McGaw. If you find this of interest, please follow and share, and I'll be back soon with more stories behind power and reputation. See you next time.